Hello everybody, welcome back. A bit of a late start this morning. So let's get stuck in. So we can see that Bitcoin's trend signal is still in play, and actually as far as candle body is concerned, we've closed above the 20 and the 21 exponential moving average on the daily, which is still very much in play with a basically an uptrend. The uptrend is still confirmed with no cancellation on the Itchy Cloud, and as far as Bollinger Band strategy is concerned, 65% more likely to maintain this portion of the band, which means that really the odds are in favour of it continuing up more or less immediately. Really, we can only really get bearish, and even in the short term only get bearish if we start closing candles on a daily below these moving averages, the lowest at this point now, because we've crept up a little bit overnight, 68,180. Obviously the trend signal on the weekly is still in place, so that's still good to go. And on the 4 hour, as much as we've retraced from this peak, we're below sort of most moving averages of significance on the short term time frames. We don't have any short signals like that. We've got a little bit of a bullish divergence on the money flow index, and the MACD has been creeping up the histogram, getting closer to making a positive cross. So as far as Bitcoin, just isolated trading Bitcoin in a vacuum is concerned, odds are in favour of immediate continuation to the upside. Still, yeah, I know. The total 2, surprisingly, is also doing the same thing. Although it's massively weak, it's still doing the same thing. So we had the death cross retest rejection and a second one as well rejection. We've come down below the lowest, the previous low, which is $900 billion market cap. The trend signal is still in play, but it's touch and go. The Chiku span's hovering above the price action. This could also just zoom straight back up. Operative word being could. I'm not saying that it will. You just play the cards you dealt. It's not the strongest hand, but I suppose it's not too bad. In poker terms, it's like getting deuce or something like that. It's not bad. It's an okay start, but it's not amazing. If we're looking for traditional markets, now this is where things can start to really sort of turn around. So based on the daily for the US 500, so the pre-market to the S&P, 50 exponential moving average is where we've held. That's where we're bouncing from so far, with a view to probably move up to around 5,809 at its best. So it's not a huge move, but support is being supported on the daily. It's also being supported on the weekly as well. On the 10 exponentials, we saw that move all the way down, bang, into it last week. Obviously this week's opened above it. We're looking for continuation on this as well. If we just take ourselves over to the 4 hourly, things again not looking particularly good. We probably have seen this short signal play out. We've lost all moving averages here. We've got a clean rejection on the 21 moving average. So I'm looking for probably a little bit of chop. Recognize that obviously we've got those elections in the next 24, 48 hours. Things are going to get volatile regardless. It's one of those moments where markets are thinking, I'll just stay on the sidelines and we'll wait and see. I suppose it's what the message we've been putting across for the last few days, last week or so. With such a crazy scenario with massive global implications, you're gonna have ripples affect the markets, and they are. I mean, I don't know how political you can get on this channel without getting monitored and algorithms being moved aside. But certain sides have certain different allocations of economic growth or failure, haven't they? So if you pick one side, then fine, you can buy arms traders and all. Lockheed Martin's going to rally. Another side, crypto's going to rally. So this is the sort of situation that's it's not just as simple as crypto and arms manufacturers, but lots of other things, because you've got commodities and different policies surrounding those, which obviously is going to cause either inflation or deflation, depending on. So everybody from any trading standpoint has really got to think hard about, should I allocate before the election or should I allocate after the election? And I suppose, if you think about it like that, when you've got two parties which are really quite different and what could take place globally as a result of it, it's probably better to stay on the sidelines until after the election. That way, at least the environment will be a little clearer as to where we're going to go for which kind of asset, commodity, stock, forex, the lot, because it does have global implications this time around. This is a big deal. and so we'll know a little bit more towards the end of the week as to whether we're going to come or whether we're going to go. But if we were to just pretend none of that was happening and focus solely on the charts, actually, I'd say that, well, it's not me saying, Investopedia would tell you that this kind of setup has a 65% more likely possibility of maintaining its uptrend, continuing up more or less immediately. But if we do lose these areas, that's the invalidation. Daily closures below $68,000 at this point should give you further downside, maybe even down towards the 50, which is around 65,700, maybe even the golden cross 63,400. All of this can be seen if we get closures below these moving averages, because then the odds flip in favor of further downside. But at the moment, the odds are in favor of further upside, more or less from this exact level. So if we trade, like I say, trade this chart in a vacuum, that's what it says. But then take it out of a vacuum, you're vulnerable to everything else that's going on at the moment. Right, I'll leave it with you there. Thanks for watching. Hope you have a nice day. Take it easy.